Okay, folks, good morning and welcome to Swing Trading Today. This is Bob Desmond, and it is at current 4:46 in the a.m. Eastern Standard Time on December the 10th, 2018. All right, what we're going to do first here, folks, we're going to go over the pre-market activity here in the States. Then we're going to segue over and into some members' stock chart request, which is where I review the symbols that our members, our gold members, submit for me to review. And I also am going to review a few symbols that our YouTube watchers submitted for me to review. Every once in a while, I'll request late in the video that if you're watching, I'll review the first three symbols that are entered as a promotional offer and a thank you for watching the video. So watch this video all the way through, and maybe I'll do it later on as well. So let's begin this morning off with the S&P futures. We're down at current about 1/3 of a percentage point. We are off the lows of the session. Let's drill down here a little bit. You can see that we were in a trading range. Last I spoke on the 7th, we attempted a breakout. That breakout failed, meaning we saw a bull trap, a breakout point failure. We had broken out above this upper band of resistance. Then we rolled over. And not only do we break back down into this trading range, we broke down through critical support, and here we are today. This is very, very bearish price action. So what we could do now is get rid of this resistance level, and now take our crayon out, draw a new upper band of resistance. We'll change this to green. The reason why I'm changing this to green, or these lines to green, is because if we break above them, well then that means it's game on to the long side because we are clearing resistance. Now if we break down below the red lines, well then that means a continuation breakdown. So we're coming off the lows of the session. We do have a little bit of a topping tail on this bar. This bar will close in 9 minutes. My guess is that they'll try to pump the futures higher into the open, trying to get everybody excited. You'll have the Wall Street banksters on CNBC talking up the market, telling us about all the great values that are out there and why we should be buying stocks. Don't listen to them. The NASDAQ, here's what I had to say about the NASDAQ on Friday morning on Swing Trading Today. Okay, the NASDAQ. I think the NASDAQ is a bit easier to read than what is the S&P 500 technically. Yesterday, we did break through resistance. We rallied up and into the primary upper band of resistance on a 4-hour chart anyway. Now we're pulling back a bit, down around a 1/4 percentage point. It's at times like these where I use the adage, you should be fearful rather than hope, because I'd current be fearful were I to purchase or want to purchase the NASDAQ in its ability to break out above this upper band of resistance. So do I want to be long right now? If I bought right now, I would be hopeful when I should be fearful. I would rather wait for a breakout above this upper band of resistance when I'm buying the fact and not the hope. So I would avoid right now. And we are rolling over here on RSI. All right, so the jury's out. Now, same chart, 4-hour chart. Hey folks, thanks so much for watching, and we're going to begin again in just a moment. But first I wanted to make a really big announcement. I'm really excited about it, and I think you're going to like it too. And the announcement is this. I am going to be raffling off a 1-year gold level membership to the Contrarian Trader. That's right, trade alerts, daily commentary, paper trading simulator, access to the members forum. And I will be announcing the winner on January the 5th, 2019. All you need to do is pause this video, click the subscribe button, click the like button, and you're in. That's it. So don't wait. Enter now. I'll say thank you in advance, and let's get back to the rest of the commentary. Now, same chart, 4-hour chart. You can see that here we were on the 6th. We broke out above resistance. Here we were on Friday morning. We rallied up and into this upper band of resistance. We attempted a breakout. That breakout was rejected at this upper band of resistance. This is why it pays to wait for a close above the upper band of resistance. This is what I meant by if you bought here prior to a clean breakout above this upper band of resistance in green, you were hoping rather than fearing. And that is not a strategy that is going to pay off, especially in a correction in the stock market and what could quite very well be the beginning of a bear market. Fast forward, we broke down below the lower band of support, and here we are today attempting to rally back. We're off the lows of the session. We have resistance right up here at 65.94. Now we are putting in a higher low here on RSI. There you have it. So I'm not going to be the least bit surprised to see a rally into the open. Again, remember why they're doing it. With all the technical damage out there, they want to pump the futures higher so they can get the FOMO out there. What is FOMO? That is the fear of missing out. They want to get everybody out there excited that the stock market sell-off is over, and they want you to buy stocks. Don't get lured in. And before I leave off here and move on, would I be the least bit surprised if we failed to rally this morning into the open? No, there's so much technical damage that's been done. I went over this quite a bit with members yesterday on the week ahead commentary. If you remember, go to the members area, check out the week ahead commentary. So please, let's be careful out there. Let's take a look at the US dollar. The dollar is rallying this morning off the lows of the session, and I'm not surprised about this because of the events that are unfolding over in Europe. The outrage by the middle class era, what's left of the middle class, is enormous. They've pretty much shut down France, and it's spreading to Belgium, Germany, and Great Britain. Now, Great Britain is not a part of the euro, but what we're seeing is a strength in the US dollar in the face of a euro that is coming under a bit of pressure. We'll go to that chart in a moment. Now, in terms of RSI, we're very close to a breakout here. We continue to put in lower highs and lower lows. So I wouldn't be a buyer of the dollar, where I have Forex trader anyway, until we rallied up and through this upper band of resistance. We're not going to hope when we should fear. And I truly hope that the dollar does not rally, because that will not bode well for our precious metal names. So the dollar trying to catch a bid this morning, the euro. Now to the euro. Now the euro has broken out on this 4-hour chart. We broke out, we became a bit extended. We're now pulling back off the highs of yesterday, and we're going to retest this support level, which now should act as support. It was resistance for most of November and thus far in December. Now, if we consolidate and it holds and we continue to break out on the euro, that speaks volumes about the US dollar, because the dollar can't catch a bid in the face of France shutting down, revolt taking place all across Europe. That's a pretty sad commentary with regard to the dollar. Now, I will say this, RSI is looking fairly bearish here. We did break out, but now we are rolling over, and this is a problem here. We just opened up a new 4-hour bar, 5 a.m., and we closed down below this breakout point. So we have a bull trap on RSI. That tells me that we're going to come all the way back down here and do a retest of this breakout point. And I'm questioning whether or not it's going to hold. So the jury's out here. All right, so this is going to lead us into gold. Now, gold was very extended. We were trading above the 3rd standard deviation Bollinger Band. We did pull back this morning off the highs of the session. The question is, do we take out the morning lows? If we do, there's a very good chance that we pull all the way back and do a retest of the breakout point here in orange. We spoke about this on Friday. I said this was the line in the sand. We were trading below it on both RSI and on price. We broke through it, and it was game on for gold as well as silver. So we remain in an uptrend here on silver. Again, we just opened up a new 4-hour bar, yet we have no trade as of yet. So this is the 1 a.m. bar, which is now closed. So we're probably going to trade within this range probably today. I don't know whether or not we'll get a breakout today or not. And that may be a good thing because it could be the pause that refreshes. Because if we get a rally up and through this resistance level, we could rally all the way up here to around $14.90 the ounce on silver. So that's a pretty nice move. Natural gas. Natural gas is on our watch list, in particular UGAZ. We are up this morning. At current, we are in a trading range. We have a bit of resistance up here at, let's call it 470, which marks the descending upper band of resistance, connecting these three lower highs. And if we get through that level, in all probability, we're going to challenge this primary upper band of resistance and quite possibly break out to the upside. So natural gas is looking good. No continuation breakdown so far this 4-hour bar, but there's a lot of time to go before this bar closes. It just opened up. Let's talk about Bitcoin a moment. Bitcoin, which had a horrible week last week, did rally on Friday. We are trading at resistance. We're struggling here. Would I be a buyer of Bitcoin? Not yet. But were I to be a buyer, of Bitcoin, I would do so on a close above this upper band of resistance. Just keep a stop right below. Let's say this low here, the low being 34.30, if not tighter. You could see that we broke out on RSI here on the 4th. We pulled back, retested. Not once, but twice. It failed. We are now back above it. And we are now beginning to put in higher lows on RSI. Now, is this a bottom for Bitcoin? Well, who knows, right? It's a 4-hour chart. We can do a deeper dive on Bitcoin in the future. Right now, we're just going to speculate about how it's going to trade today. But I'll tell you, in this environment where you have massive taxation over in Europe, and it's coming here to the United States, you have geopolitical turmoil all around us. If Bitcoin can't rally in this environment, when will it? So in closing on Bitcoin, we're seeing some reasons to be optimistic here, but I would not be a buyer as of yet. Wait for a breakout above resistance. Let's leave off with the VIX futures. They are up this morning. They had a weekly breakout. I discussed that with members on the week ahead commentary. We continue to put in higher lows. We do have resistance immediately above. We have higher lows on RSI and a nice W formation forming. Now we need to see a breakout above this upper band of resistance. If we do not, and we break down below this line in red, which is acting as support, well then, that means it will probably get a rally, however brief, in the S&P 500 and a pullback on the VIX. So again, watch for a breakout above resistance. That'll probably mark a new weekly high, and that will mean a new weekly low for the S&P 500. Folks, let's segue now over and into members' stock chart requests, which is where I review the symbols that our members and YouTube subscribers submit for me to review on video. Hey folks, just a really quick thank you for watching this far into the video. I appreciate it so much. And a quick reminder, don't forget about our 1-year gold membership raffle. That's a $1,164 value. And all you need to do is just click the subscribe button, click the like button, and you're entered. That's it. And we'll announce the winner on January the 5th, 2019. I'll see you there. Let's get back to my commentary. And if you have any questions, leave a comment below. Okay, folks, now let's segue over and into our gold members stock chart request. This is where we review the symbols that our gold members submit for me to review. And from time to time, what I'll do, especially on longer videos, is as a promotional reward to viewers, subscribers of the Contrarian Trader channel. On YouTube, I will offer to review the first 3 or so symbols that are submitted by our YouTube watchers. So make sure you watch these videos all the way through. I do read the comments, and I will go over your symbol if time allows. Obviously, I dedicate most of my time to members. All right, so let's get to it. The first chart up is going to be one of a few resource plays. We're going to go over Gold Corp, GG, then the GDX, then WRN, which is a copper play, ABX, gold stock. Let's move this so it's in sequence, appropriate sequence. Then the last resource play is going to be BHP Billiton. And then I have Intercontinental Exchange, Netflix, ACN, which is Accenture, DLTR, Dollar Tree, and 5. That is Five Below Inc. Let's get to it. Beginning with Gold Corp. Weekly chart. The weekly chart is very, very important to me right now with Gold Corp and for most of these plays because the markets are breaking down. It's critical to identify where the stocks have been, to identify where they may be going. If they're moving lower, well then where is their next support level? If they're moving higher, well then what is their next resistance level? And the weekly charts help us to navigate these very, very treacherous waters that we find ourselves in right now. So Gold Corp bottomed out back in October and has rallied off the lows of the week of October the 22nd. We've been consolidating along the $9 per share level. Now, Gold Corp has underperformed the other gold mining stocks. In fact, the GDX was up 5.81% last week alone, while Gold Corp was only up 1.62%. It outperformed the overall market, but still, relative to its peers, it underperformed. So right off the bat, it becomes my least favorite of the group. So we remain in a triangle formation. When do I get excited here about Gold Corp? It must close above this upper band of resistance at around $9 and let's call it 80 cents per share. Now, what I will point out here is that we broke out a couple of weeks ago, the week of November the 19th, above this upper band of resistance on RSI. So the relative strength index is putting in higher lows and is positioned now to put in higher highs. So that's bullish. Volume last week is about average. So the chart is shaping up. But again, it is not the favorite of the group. And think about this, is that if you have an individual stock, you run the risk of having headline risk, right? Whereas if you bought the GDX, you have less exposure to headline risk, and frankly, it's performing better than Gold Corp. So why own Gold Corp right now when you can just own a less risky ETF putting you long of the gold mining sector? Now, the next chart up is Barrick Gold. It was up better than 7% last week, and it outperformed the GDX. So why to buy an individual name, I'd be looking at ABX. Now, we did break out on RSI. We have higher lows in a double bottom setup on stochastics, and we're moving higher. We broke out last week. It's difficult to see here. We are above resistance, but we are not above the 200 period moving average, which is at current at 1371. We closed out the week last week at 1368. So a bit of resistance. I think we're going to go through it. I think we're coming up here to this upper band of resistance, and we should see a 14 handle fairly soon. So Barrick Gold looking good. WRN, Western Copper, weekly chart. It's a weak stock, and it appears as though it's going lower. RSI at 21.07. It can go a lot lower. Stokes rolling over, very weak. Last week we flashed a bearish key reversal, and we closed down below 48 cents per share, which they attempted to defend, and it did mark the low of the week of November the 12th. We are now trading below, or we did close last week out below That support level, that is very bearish. We're going to see the next stop down here at 44 cents per share. And if that breaks, we're going to see these shares trade down to around 38 cents per share. So this is a weak stock. It's going lower. The one caveat here, a bullish caveat, is that down volume is beginning to drop off dramatically, well below average, and it is dropping off sequentially as well, week over week. The next chart up, BHP Bulletin, weekly chart. Now, BHP managed to close up last week, but it couldn't hold its mud. It couldn't hold its gains. Now, could it be that it's simply consolidating here? Absolutely, it could be. Volume last week was very good. Now, what I don't like here are the Stokes. This is a forward-looking momentum indicator, and they are very, very weak. They are putting in lower highs. This is the fourth sequential lower high and lower lows. Not good. Now, we have a tendency on BHP Bulletin of late to have a V-shaped recovery on Stokes. So might the same happen here? It could be. I'll keep an open mind. So as long as we hold this 43.71 level, I'm okay if you're long of the position, sitting with your position. Use a stop right below 43.71. If you want to stay conservative, if you want to be a little bit liberal, put a stop right below 41.94. Now, when would I add to my position? I would add if we pull back and reverse off of this key support level and recapture it. That would be bullish if we flash a bullish key reversal. Or even better is if we break out above this upper band of resistance. And keep an eye on the US dollar. If the US dollar breaks, it will help BHP Bulletin because a weak dollar helps natural resource plays. Intercontinental Exchange, ICE the symbol, ICE. Avoid like the plague. Very bearish stuff here. RSI broke out back here the week of November the 5th, rallied, pulled back, retested, then began to move higher again. The problem is that last week we failed. We failed to take out the prior high. We also failed to hold the prior low. This is a breakdown on RSI of epic proportions. You want to avoid this stock. Price action. This is an outside reversal week, a very bearish setup. We've seen this setup all over the place last week. I discussed this with members in great detail on the week ahead commentary. Members, if you haven't watched it, it's posted in the members area. It came out on Sunday. I think that in all probability, we are going to break here and head lower. Next stop, 76.98. I think that breaks. The financials are an absolute nightmare. Volume was very high last week. Stochastics put in lower highs and a double top here. Folks, you would have to avoid Intercontinental Exchange. In all probability, it is going lower. Netflix, which we just traded to the long side, and we booked profits quickly. Thank goodness that we did, because that rally has failed. Let's update this chart. Okay, so here you have it. We'll begin with RSI. We have lower highs and lower lows. Same deal here on Stokes. Now, the week of the 26th of November, we flashed a bullish key reversal. Last week, we had a continuation breakout above this upper band of resistance. However, we reversed to close lower on the week. Very bearish stuff. I think that we're going to break. We're going to come down here to 250. I think that it breaks and we are going significantly lower. Volume was about average. Let's take a look at the daily chart here. See if I get swayed. Probably not. If we take out 250, we're going a lot lower here. Probably all the way down to fill this gap, which opened up on January the 23rd of this year. And we could be there very, very quickly, folks. So watch this 250 level. My guess is that if we make a new weekly low this week, in all probability, we're going to retest 250. And my guess is that it breaks. So I would avoid right now. Accenture weekly chart. So we have RSI on Accenture, which is very weak. It is putting in lower highs, and in all probability is going to take out the lows of the week of the 19th. This rally off of the lows of the week of October the 29th, to me, is an ascending flag formation. I think that it fails. This is typical of a dead cat bounce. I think that this is going to be a lower high, and that once we break this lower band of support, we're going to take out 150.63, and we'll be headed down to the 143 range. Volume well above average. Lower highs on Stoch RSI. The stochastics are an absolute disaster area. Both lines on Stokes down below the 50 level. What do we know about stochastics when they're trading down below 50? Rallies tend to fade. Do not go buying rallies. What matters is how, whatever chart you're watching, if you're using a weekly chart as we are right now, what matters is how we close out the week. If you're using a daily chart, how do we close out the day? Take, for instance, last week, we rallied above the prior week's highs, which was bullish. However, we couldn't hold it. That's very bearish stuff. This kills confidence. In all probability, we're going to break this coming week and head lower. So I would avoid these shares like the plague. Dollar Tree, weekly chart. A brick and mortar retailer, you know, I just don't like the space. Much as what we saw on the chart of Accenture, we have an ascending flag formation. This is just a dead cat bounce. I think we're going to get a continuation breakdown. When am I wrong? When we break out and close above 96.09 per share. It's at that point in time we'll begin to put in higher lows and higher highs. Until then, I'm not loving this chart. Now, RSI, it's hard to see it here, but we are rolling over, and let's be conservative, okay? Let's say we closed at support. One could argue that we closed below it. It all depends on how you drew your line. Let's say we closed at support. Now, the one bullish thing I will say about this chart is that you have Stokes putting in higher lows. But when I take a look at the price action trumps everything, along with volume. So in terms of price, what you're seeing here are a lot of topping tails. What does that tell you? It means that every time they rally the shares, sellers move in and they take it down. So you're seeing distribution. Last week you had a bearish reversal bar. We closed below the 200 period moving average in red. Now, volume the prior week was very good. Last week was a below average. So volume action is not that bad. The price action, though, is not good. I think that these shares should be avoided, and they're a short on a break below 81.02. Five Below Inc., FIV, the symbol. We were bullish on this only a couple of months ago, maybe less. But now we have a lower high. We've broken support at 108.76. It's a short. A new weekly low and a close below 95.61. That will take you down to, wow, $78 per share, which marks resistance going back to April of this year. Stokes are very weak. Volume very high. Folks, you have to avoid this stock on a break to a new weekly low, and especially on a close below 95.61, please. And that's it for this morning, folks. Everybody have a profitable trading day. Don't forget to subscribe to my YouTube channel. Be well. Hey, folks, just a really quick thank you for watching this far into the video. I appreciate it so much. And a quick reminder, don't forget about our one-year gold membership raffle. That's a $1,164 value. And all you need to do is just click the subscribe button, click the like button, and you're entered. That's it. And we'll announce the winner on January the 5th, 2019. I'll see you there. And if you have any questions, leave a comment below.